Stavros Tousios for M4Markets. We're going to have a quick look at gold and also WTI today. It looks like to me that there is another triangle here that have just recently broke out for the prices of gold. This suggests, should that be the case, of course, that this breakout is likely to lead to further upside. And if we take into account, of course, the measured move, this should lead to higher highs here, 280, which, by the way, is very close to the previous high. So what this implies is that we might be heading, if this is of course a triangle, we might be heading to a record high. It is of course very important that we stay at least above the 50% of this upside leg. This is around the 1998, making the 2000 support, as we have of course recaptured the level after nearly 3 weeks. Very important. Now, as we go up, you see that we have already reached oversold territories and there might be a correction. This correction from down here, let's say all the way up there, could take us below the 50%, but it might just be temporarily. So we have to pay attention to how this zone between 1994 and 2004 is going to react. Typically, corrections of that in that particular sort of phase of an upside move are deep. So don't get tricked in case we do go below 50. The 50 acts as an actual sentiment meter. So under 50, we are short-term biased to the downside. Above 50, short-term biased to the upside. Unless the 0 and the 100 break, there is no really range breakout. When it comes to oil, oil has come down to the 61.8, which is a very important level. This is of course now consolidating, and by the looks of it, it looks like one more wave to the downside might also come through. It's not necessarily a case where we're going to continue breaking to lower lows below the 64, but judging by the fact that we have 5 waves here and we have something like some sort of correction here, okay, if this is indeed a 5-wave leg to the downside, then we stopped here, and that means that we are going to go higher because that wave cannot be shorter than this. This implies, of course, that this might be a different type of correction. Maybe this is a correction like this, like 1, 2, 3, 4, and 5, which would make all of this an actual flag, like an A and a B and a C. If this is indeed the case, then we need to measure the 100% or have expectation for the 100%. That again has already been taken out at 72.34. And the next level come down is around 68. And this is a cluster between the 79 Fibonacci retracement and the 161 Fibonacci extension of that first leg to the downside. However, getting there means that we are going to re-enter this territory over here between the 66, 67 and 71, 72. Okay, by entering this territory, which we have pretty much already done because we tapped it, okay, we violated that territory, means that the door to 66.80 something is open. Okay, I want to say wide open, but is open. Now, since we're a bit further for upsides and trends, let's look at how this potential channel could be reacting here. Look, we have an accelerated move to the downside, guys. So if we don't return back within this channel quickly, then there is potential for further downside and acceleration to the downside. So as long as we remain outside that level over here, okay, there is higher potential to go and retest that previous low rather than not. If we manage to come back above, it will be important to recapture 73.86, not just because it's the 50 Fibonacci and it will give us a bias change, but also because it's the previous swing low that if overlapped, that could mean that we can finally start moving to the upside once again.